Welcome to the Money and Markets podcast. Today we are talking about all things investments, all things money. And today I'm joined by one investor in Zimbabwe. I think I will call him the intelligent investor in Zim, and that's Tatenda Courage Nemaungwe. Among other investments that he does, he's also an investor on the Zimbabwe Stock Exchange, as well as on the Victoria Falls Stock Exchange. I know he also has investments on the JSE and other international markets. But today our focus is obviously going to be on the investments on the Zimbabwe Stock Exchange, as well as on the Victoria Falls Stock Exchange. Courage, welcome to Money and Markets podcast.
Thank you, Kudzie. Thank you for having me. Good evening to the viewers who are with us, and thank you for inviting me. I'm just hoping and wishing you guys had a great 2024.
Thank you. So, Courage, just like many other years, 2004 was one of those volatile years in terms of inflation and also in terms of currency depreciation. And you are an investor on the Zimbabwe Stock Exchange as well as on the Victoria Falls Stock Exchange. Maybe if you can describe to us how you saw the 2024 investment environment, what stood out for you, and what would you say were the key determinants of how the Zimbabwe Stock Exchange as well as the Victoria Falls Stock Exchange performed in 2024? We know we are just left with one day to go before we close off trading in the year 2024, but I don't think it will change much.
Okay, good. So 2024 was quite a tough year in terms of investment. It provided quite some tricky situations. So on a domestic basis, you spoke of inflation and our currency issues which we have here in Zimbabwe. So inflation has been an animal, which obviously it's the purchasing power of any investment. And I think Zimbabweans have mastered the art of hedging against inflation. So it's something we've been doing. It's something we've continued doing from the past, from as early as 2004, as you highlighted, up until now. So inflation, yes, did play a major role because obviously we would end up with too much money fetching, fewer goods. But the most important thing as an investor is how do you hedge against inflation? How do you position yourself? So we saw investment, continuing in stocks. Obviously, I'm biased towards stocks. So yes, we did see investors going into stocks as a way of hedging inflation. We saw investors go into farming, which is cattle fattening, goat fattening. Just as an example, we saw a lot of real estate. I'm sure it was even discussed in Parliament that for every block of solar meters, we're seeing the erection of service stations. So that's part of the mechanisms which were being used to hedge against inflation. So I think if you make your investment plan without considering the fact that inflation is part and parcel of our investment journey here in Zimbabwe and across Africa, I think your plan would have failed before it begins. So inflation, we definitely need to hedge against inflation. And I'm quite impressed by the way in which investors and potential investors have been going on that issue of hedging against inflation. Then on the currency aspect, we saw the change of our currency from RTGS to the Zimbabwean gold, and it started off being very stable. It was looking for its value, And I'm happy to say that it's been quite stable. Yes, of course, here and there it gets affected, but it's been quite stable. Uh, it's no longer we didn't experience that much runaway inflation compared to what we experienced in previous years. So again, in terms of currency, you can always hedge because we're in a basket of currency. So you can hedge with your US dollar, euro, rand, etc. On the market. Then, in terms of investments, be it on the capital markets or what we call foreign portfolio investment when foreigners are coming in, or foreign direct investment coming in, 2024 was quite difficult because it was housed by quite a number of elections. Namibia went for elections, Botswana went for elections, South Africa went for elections, Mozambique is currently in finishing off their elections and electioneering process. Then Zimbabwe just finished off its election in 2023, and obviously it has a spillover effect into 2024. So the whole region was a bit illiquid in terms of how money moves, because when investors come through to a country to make long-term plans, they need to invest knowing, of course, quite a number of fundamentals, and politics is one of them. You want to know who's in power, what party is in power, what are their policies, etc. So you'll find that across the whole SADC region, when you have almost 40% of the nations, 30 to 40% of the nations going through elections, it's not going to be an easy year in terms of investment. So we saw liquidity being very tight. Locally and regionally, it was quite tight. And that's why I said 2024 was quite a tough year in terms of investment. But from each and every investment, whether it's a good year or it's a tough year, you always learn, which is the most important thing, because you have to master the process. The outcome, the fruit is always good, but what's important is to master the process. Then that way you can be able to maneuver in whatever environment, regardless of whether the economy performed or not. So that's my basic understanding and view of 2024.
Thank you, Courage. Let me take you back a bit, looking at inflation. So obviously, we had the highs and lows of inflation throughout the year. But as we close off the year, I think the December numbers just came out this week. And we saw, well, last week, and we saw the US dollar inflation ending the year at 2.5% year on year. And then on the local currency front, I think we didn't have the year-on-year numbers, but we saw inflation coming down from a peak of 37% in October, coming down to about 11% in November, and then coming further down in the month of December. Now, looking at the gains that we were recorded on the Zimbabwe Stock Exchange, would you say that ZSE investments, which I think I'm just trying to have a quick look at the spreadsheet there in terms of year-to-date gains, would you say that the ZSE at close to, I think it's close to 100% gains over this year, would you say it was a good hedge against inflation? We'll come to the issue of currency, but for now, would you say, given where we have closed off with inflation, would you say the ZSE was a good hedge of inflation? Since earlier on you said that the stock market allows you to hedge against inflation.
Okay, thanks, Kudzie. So generally, the basic rule of thumb on investment on any stock exchange is to obviously hedge against inflation, to hedge against currency risk and the like. So with regards to your question, whether the ZSE was a good investment hedge against currency risk or inflation, it basically depends on how you invest as an individual or as an institution or as a corporation on the stock exchange. So if you obviously buy shares at their peak with the intention of hedging, no matter how much you're putting on the market, you're not going to win. So it then comes back to the strategies of how you use the stock exchange as a hedging mechanism. Just because we pointed out the fact that the stock exchange it can be used as a hedge against inflation and currency risk, does not mean you will win in terms of hedging. You obviously win if you know what you're doing on the market. And for you to win on the market, we come back to the basic rule of thumb, which is buy low so that you sell high. So as long as you manage to time the market, to watch the market, and you bought low, then you have a greater opportunity of or a greater probability of being able to then sell high. But if you buy high, regardless of each being used as a mechanism, it will then become so difficult. You'll find that the Zimbabwe Stock Exchange, in my view, is the simplest place to invest because what you need to consider, considering the basic rule of thumb, buy low, sell high, you just need to consider the range, the price range of shares which are trading on the market. So the simple hedging mechanism is to buy low so that you sell high. Then, on a practical aspect, the stock exchange performed quite well. But as we proceeded, we realized that the Reserve Bank of Zimbabwe did an excellent job in terms of controlling the inflation on the rate on the ZiG. Because when the ZiG was launched, there's a time when it ran away. But what the Reserve Bank did is it started, allotting more funds on the auction system, so that reduced the appetite of US dollars on the parallel market. And what that does is all that local currency, which is supposed to chase for currency on the parallel market, will go into the banking system. And once that happens, it's actually a mechanism of mopping off excess liquidity on the market. So when liquidity is being mopped off, remember ZSE uses liquidity as an input. So when it's mopped off the market, it was quite illiquid. And it being quite illiquid, we saw quite a number of counters dropping to their all-year lows. I think these are all-year lows from 2010 to date. So that would present an opportunity for whoever had liquidity, which is also one of the principles you need to consider before investment. You need that excess liquidity, that which I call access to excess. That surplus is what you then use to attack the market. So for those who were holding liquidity, definitely they made a killing. We saw Econet trading at its lows of 2016. I think you remember the time Econet issued out a debenture, which was put together with a rights issue. Its lowest price then was around 12 US cents, which was the greatest discount ever. But because of the liquidity crunch which we had in 2024, we saw Econet as low as 7 cents. It's unheard of. Such opportunities will give you opportunity to have in the same time. And so that's how I consider was operating in 2024. So the basic rules were continue to be basic, and I'm sure spilling into 2025 they'll continue being basic. And whoever followed those simple basic rules managed to hedge and also managed to get a substantial return from the market.
Buy low, sell high. That's the basic rule. It doesn't change. Buy low, sell high. So yeah. I've just got the numbers, Courage, on the inflation front. So the ZSC, that's just looking at the all share index, is up by 116% year to date. So in fact, the year to date, we are talking from the 8th of April when ZiG was introduced, and there was some rebasing by the Zimbabwe Stock Exchange of the exchange. So 116% gain on the all share index, 113% gain on the top 10 index, and then 127% gain on the medium cap. And when you compare that with, even if you are going to look at the year-to-date inflation, even in ZiG terms, you can actually see there that as much as we hoped that the market would do much better throughout the year, especially post the introduction of ZiG, if you look at that 116% gain, still it has done well in terms of not only as a hedge against inflation, but also even giving some good returns And you spoke about some counters that were at their all-time lows. I'm actually pinching myself that I didn't have what you were talking about recently to say you need that excess cash that is on standby. I know one counter that went to as low as 5 cents, 6 cents, and I didn't have the liquidity. And it has since bounced back to around 8 cents, 9 cents, which is still low, but there was that low period of 5 cents, 6 cents that investors could have bought. So yeah, you are pretty right to say that it all depends on when exactly do you get into the market. Because if you get into the market when prices are at an all-time high, obviously you don't get to enjoy the gains that others would enjoy, those who got into the market at the lower end. Now, let's look at the currency front, Courage. There was that devaluation that we saw, a 43% devaluation that we saw at some point post the introduction of ZIG. And since then, yeah, there's been stability. If you look at the official exchange rate, so it's been 1:26, between 26 and 25 for a while now. If you look at the parallel market, you can get it anything between 38 to 41. It has been stable right there. And now you're looking at what has happened on the stock market in the last 3 months. If somebody had bought shares during that period, I'm sure you would agree with me that the hedging aspect might have been a challenge because we saw the market coming off. Although some stocks have been volatile, up and down, like the likes of one of the counters that I'm talking about. I'm not mentioning it now because the last time I mentioned it, the next day mentioned it on radio, then I can't buy it because I think people. So yeah, on that front, so what do you think on the currency front? Is the ZSC still a hedge? Does it give you good returns when you look at the volatility of the local currency? Is it still worthwhile to invest on the ZSC given the volatility that we saw on the currency front?
Okay, so coming back to your view of whoever invested on the market 2 to 3 months before the time we are here now, that they lost value on the market. Yes, that's theoretically correct because, you know, when you calculate your portfolio after buying 2 to 3 months back, it's obviously in the negative, but you only make a loss when you sell. So the fact that you haven't sold means you haven't made a loss.
100%.
And yes, and for you to buy shares in October, November, December, to me, it's a bit of a flow because you should understand the cycles of the stock exchange. As we approach November, there's what we call the November effect. So the November effect is a period where shares generally lose value as counters, as most companies will be preparing to pay for their taxes, the QPDs. So obviously there will be a lot of cash flow which will be moving out. And you should understand that most of these institutions also hedge against inflation and currency risk on the stock exchange. So come time for paying QPDs, they come on the market and they just sell because they have an obligation which they need to fulfill with the Zimbabwe Revenue Services. And failure to do so will mean penalties and penalties and penalties. So you don't want the taxman coming through and, you know, enforcing with his long stick or long rod. So rather they go on the market and they start offloading their shares so that they can meet their QPD obligations. So November is a bad month to invest. That's basically the first one. Then the second one is most companies will be paying dividends and paying directors' remuneration. So you'll find that towards November, it's not a great month to be buying shares. Then you find that we have a culture of paying bonuses in November in preparation for the festive season. So the cash flows of most companies will be bleeding. So at that point, you obviously have quite a huge bear run. So buying shares towards the November effect when they are high, especially in October, is a bad idea. And you will not be able to to recoup in the shortest possible time, as your portfolio would have shrunk or diminished from the value you invested. However, there is always a solution to every problem. When you buy low, this is what you and me always talk about to our fellow investors, retail investors, and other institutional investors. We always say buy the dip. And I remember one person raising their hand and saying, "How deep is the dip?" Because we keep dipping. And I say, no, you have to keep buying. Why? Because as shares continue being suppressed down to their bottom or to their floor or to their lowest prices, there will be so much resistance. I'll give a very good example of Delta. The moment Delta starts to creep below 30 cents, it will create so much resistance and an upward momentum which you've never seen before. Same goes with Econet around 7 cents. Same goes with EcoCash before it unbundled part of their assets back into the Econet family. The moment it will reach around 2 cents, the resistance will be so strong. And that resistance alone will ensure that you're able to recover in the short term. So the moment you use the stock market to hedge, it comes back to the thing I spoke of first. For you to hedge well and protect yourself well and your investment well, you need to consider the currency. You need to consider the prices at which the stock market is operating from. The currency and inflation, those are just byproducts of our day-to-day problems. But you as an investor who wants to be successful, you need to know the golden rule, and which remains the same: buy low, sell high. That's basically it.
Let me maybe seek clarification, Tatenda. So I'm using your names interchangeably there, Tatenda, Courage, Nemaungwe. So let me seek clarification here. So since we started, we have been looking at the ZSE or the stock market in general as a hedge against inflation, because it's one of the vagaries that we have, as a hedge against currency depreciation. Obviously, another challenge that we have in the market. But are we saying that investing in the stock market is mostly as a hedge, or there are other reasons why we should be investing on the stock market apart from the hedging aspect?
Okay, so that's a very good question. And that's one question which gives us so much faith and trust in the stock exchange. So investing on the stock exchange is not only a hedge, especially for corporates in Zimbabwe. We've got a basket of currency which we use. And if you go on the market, you're not able to buy property using the local currency. Very few sellers will accept it. Very few real estate agencies will accept it. Even sellers themselves. You can't go on the market and buy fuel with the local currency. You can't go on the market and do these huge capital developments with the local currency. So as a result, the only place where the local currency can be viable for investment becomes the stock exchange. So you can go on the stock exchange and pump in as much local currency as you have. So yes, it's not only a hedging mechanism, but it's also a solution, a legal solution to dealing with the issue of inflation, to dealing with the issue of hedging. Because if you go on the parallel market, you're only looking for trouble for yourself with the FIU and many other, organs of the state, which make sure that we conform to the rules and regulations set in terms of dealing with currency. So the stock exchange then becomes that where you can take your local currency and invest and hedge against inflation and also against currency risk. So I think that's basically my view regarding the stock exchange as a hedge and also as a means or a tool of facilitating the ability to actually solidify and clean balance sheets of huge corporates which face quite a number of revenue which comes through as local currency. So you can think, for example, Old Mutual, it collects rentals in both currencies, dominant currencies, the US dollar and the local currency. What do they then do with the local currency aspects? They pay their obligations, which can be paid and serviced in the local currency. Then the bulk of it has to go on the market. So how you experience this is you'll find asset managers and stockbrokers fighting for that business of big institutions like Old Mutual, Mega Markets, and the like, and many other new players coming on the market. Why? Because they'll be coming in to assist them to actually solidify their balance sheets and push them into equity investment. And when it comes to reporting, it then becomes net interest income, which they get from the stock market. Not really net interest income, but other income. You see, on your balance sheet, you've got your revenue, which you get from doing core business or executing core business. Then you less your COGS. Then from COGS, there you have other income. That's where you have your dividends received. You've got your capital gains, etc. So you end up cleaning off all the local currency from the balance sheet and stabilize the balance sheet of these huge major institutions without breaking any law.
What about wealth creation? Is there still room for wealth creation on the ZSC as well as the Victoria Falls Stock Exchange?
Yes, there is a tremendous opportunity to create wealth because if you're buying a share which costs 60 cents for a mere 8 cents, there is definitely an opportunity to create wealth. So you only need to have a very clear investment objective where you come in on the market, you buy at your predetermined buying price. Then you obviously have to calculate or peg your selling price. So for you to then create wealth, the moment you reach your offloading price, you should have a plan. Okay, I offload, what's the next step? What I call peripheral vision. Peripheral vision is described as knowing what to do with a situation which is not directly in your eyesight. It might be on the rare side, but you know it's there. So before it approaches and before you deal with it, you should already know how to deal with it before it approaches. Then with the Victoria Falls Stock Exchange, it's also a good way of making wealth. Why? It's a US dollar denominated market. We've seen most of the counters migrating to the Vic Falls Stock Exchange. We've seen liquidity on the stock exchange improving on the Victoria Falls Stock Exchange. We've seen shares exchanging hand, and we've seen huge activity. And the good thing about the shares listed on the Victoria Falls Stock Exchange, they also pay quite some handsome dividends. You have your Simbisa, your Insco, you have your Tatenda, your National Foods. These guys are serious in terms of giving returns to investors. So you find that it's very attractive. But in as much as it's attractive, we also have an issue of liquidity. So on the stock exchange, we've got two forms of liquidity. The first liquidity is the ability to buy and sell shares. So your liquidity risk on the stock exchange is basically the ability to get into a position when you see an opportunity. So the easiness of getting in on that position describes your liquidity. Or the easiness of getting out of a position before a particular event happens also describes your liquidity. So that's the first part of liquidity on the stock exchange. Then the second part of it is actually on liquidity challenges being faced on the Zimbabwe Stock Exchange are the same liquidity challenges also being experienced on the Big Four stock market. So it now comes back to you as an investor. We have problems, agreed, 100%. But what makes you a successful investor who will be able to then create that wealth is what you do under these situations and circumstances. So it comes down to strategy. I remember Kudzie, my portfolio back then, I started off commercial investment with 200 bucks. That was in 2015. But the ability to maneuver with those funds will make you sit in certain positions as time proceeds. So it's not about the amount or about the situation at hand, but it's about how you interpret what's there on the ground, which makes you win.
Interpreting what's there on the ground. So another quick fire question, maybe you can answer within a minute. Looking at the ZSC VFAX, long-term investors, those who buy, hold, and forget, is it a good strategy on the ZSC? What do you think?
Well, our market is very dynamic. So I would always say you can't use a static strategy in a dynamic market. You obviously fail. So buy the buy, hold, and forget for me does not work on our market. You really need to be there on a daily basis. Even if it means just peeping on the market 5 minutes, you will be able to see and maneuver as situations happen because Zimbabwe is so fast. I always say Zimbabwe is faster than Dubai. But many people do not understand. Zimbabwe is fast. You can't use a static solution on a dynamic situation. So for me, buy, hold, and forget does not work. We need to move with the market each and every day.
Going into 2025, what are the prospects for you like? How are you seeing the market?
Obviously, 2025 is very, like I said, that 2024 was generally affected by regional, engineering processes, which have now been, resolved, and we have new governments, new political parties in power, and etc. We're going to have business starting to flow. So what's really important is what you do in terms of tapping into the river of opportunities which will be flowing. Because like Jim Rohn always says, success is like an ocean. But the problem is people go to the ocean with a teaspoon. So at least you need to go with a bucket, you see? So it's all a matter of how do you position yourself. I think 2025 is going to be very interesting because obviously, if we're looking at our area, which we specialize, you and me, we realize that when stock brokers, fund managers, institutional investors come back from the festive, they come through here, they're seeing shares sitting right at the bottom. What do you think will happen? They'll obviously jump in on the market, buy secure positions, and solidify. And the more we have institutional investors coming through, coming on the market and grabbing all those loose shares where people will be buying, will be selling low for whatever reason, will be very good for people like you and me who play on the market. Why? Because they'll be wiping off all excess liquidity in terms of shares being held by those who don't understand their value. There are quite a number. I'll give you an example of
Maybe, yeah.
one counter.
Yeah, thank you.
Which I want to mention.
Yes, mention it.
No, which I won't mention.
Yeah,
But
you won't mention. Yeah, so maybe
happened?
that's sorry, Courage. I think I'm running out of my time, but so that's all we had for today. I'm hopefully I'll be able to get you after every month just to talk about the shares and investments in Zimbabwe. But thank you so much for taking your time to be with us this evening.
Okay. Thank you, Kudzie. Really appreciate it for having me on. So
thank you. That was Courage Tatenda Nemaungwe, one of the local investors, retail investor, institutional investor at the same time, giving us some his thoughts on the Zimbabwe Stock Exchange as well as the Victoria Falls Stock Exchange. If you want to buy shares on those markets, if you're one of those who are the do-it-yourself kind of guys, you can open an account, ZSE Direct, VFX Direct. Those are platforms that you can actually use to buy shares. But this was not financial advisory. Be sure to speak to a financial advisor, a stockbroker, an asset manager, or any other, or even an investment banker so that you make informed decisions. So that's the Money and Market podcast that we will hopefully be bringing you as many times as we can so that we help each other navigate our markets.